Good afternoon, ladies and gentlemen. A very warm welcome on Market Masters, a very special show where you get to meet the finest brains in Dalal Street, professionals who've made tons and tons of money for their clients, who've navigated bull and bear markets with equal ease, and over the last 3 decades or so have a very strong standing on Dalal Street. Our guest today is a very special gentleman. Mr. Harendra Kumar, Managing Director for Institutional Equities at Elara Capital, a very erudite, quiet and a deeply thoughtful person who speaks very slowly and manages a lot of overseas money for foreign institutional investors. Namaste to you, Harendra ji, and what a pleasure welcoming you after a very long while. Paint for us a picture of Dalal Street at this point of time. Are all the dark clouds now ahead as far as we are concerned? And what is the silver lining that you see over 2025?
First of all, thank you so much, Harendra, for the kind words. I think, like we spoke also last time, it is the passion for the markets and love for markets that keeps us going. Now, I think, with respect to the markets, right, there was a narrative that the market was going down lower. China was a preferred destination for global investors. I think since that moment now, a lot of narrative has changed. The government of India has started to spend. The inflation trajectory is low. The GDP print is positive, and the dollar index has started to weaken. So that narrative, I think, is now passé. Most investors now should look towards an optimistic outlook for the next 18 months. I think that is one primer, to the markets going ahead from here. In addition to that, you are going to have a good monsoon and a stronger rural economy, which was the Achilles heel for the markets over the last 18 months. So all in all, we are in a good space now with respect to positive returns for the market. We can debate in terms of what the quantum of returns can be, but it is going to be a positive return for the rest of the year. That is confirmed. Right. Now, from here, I would like to add the next leg for India's growth chapter. While 6.5 is an accepted number for India's growth over the next 30 years for our Viksit Bharat, the underlying script that is changing is with respect to the FTAs that India is signing.
Okay.
I would like to point here is that between India, UK, India, Japan, India, Australia, India, Middle East, and what is going to be India, EU, and India, US, India is going to create a great opportunity for shifting the manufacturing ecosystem into the country. In the rough estimate, I think it could add another 100 basis points or 200 basis points to our overall long-term growth, which of India's growth trajectory. So yes, I think we should stay constructive in the markets and continue cognizant of the opportunities that the market throws in front of us.
Okay. Harendra, FTAs that have happened in a bit more detail, because we are so much into equities and on 6 months. That's the nature of the beast that we deal with on a daily basis. Find out sectors that might outperform because of FTA with UK, find out sectors that might outperform because of our new pact with Japan. But paint for us a picture. How do you see these FTAs transforming the Indian economy over the next maybe 3 years or so, now that bilaterals are becoming more important at a time when globalization doesn't seem to be, the flavor of the season?
Correct. So I think the first thing that we have to conclude is that the world is no longer flat, right? I think after this tariff wars, most geographical like the EU, the US, Asia is going to recalibrate its supply chains. Is because what is happening, and this system is going to remain for the next 4 years. Now, every country will have to decide what it will give way to with respect to imports and where its strategic interests lie. In my estimate, or what is can say considered research that we have, I think India will play what existing ecosystems it will try to catalyze. One is pharmaceuticals, we'll try to build defense, We will try to build critical technology with respect to clean energy and also consumer durables. Then you have textiles and toys, which are the low value added items as well. Now, how does this work? So India will obviously, with give some and take, will try to negotiate a favorable deal for this ecosystem that is already working here. And right, it will try to go to the larger markets. Now, once these are done, I'm sure and pretty confident the government of India will apply several incentives to this sector so that they become cost efficient, right? And the manufacturing, global manufacturing supply chains will move into India. This itself will create an ecosystem, so that India can go out and become export champions. For example, the initial reports that are coming out with us that India is trying to negotiate with the US with respect of giving them lower cost generic pharmaceuticals so that they can make it competitive for US consumers. So this is a win-win for India and the US, right? And a win-win for Indian pharmaceutical companies. So the demand that we put up is that the evergreening of patents that US does needs to be relooked at so they can allow generic players to manufacture at lower cost and supply. This is just one example that we are putting up. Second is on textiles with the UK FTA. We were disincentivized with a 10% tariff. Now that tariff goes away. And if India subsidizes textile production within India, India will become a global hub for textile manufacturing. Similarly, a lot of incentives that the government is keeping with respect to jewelry and jewelry manufacturing. India already has an ecosystem which is aligned to these sectors. So the point I'm making here is there is a narrative and a story in terms of how the FTAs have been designed and written. And this is not, it is the wrong way to look at this. Oh, today we are manufacturing this and we are going to lose out so much. There is some give and take to establish strong, durable, and large ecosystem within the country so that we can become export champions.
Okay. Now, how do you wish to play this FTA theme running across the market, across sectors? What is Elara Capital advising its institutional clients in terms of 2 or 3 top picks from these which can be held maybe for 3 years or more?
So one, of course, is I think textiles is a very clear winner. Though we would like to believe that we have large capacity, will not framework. They'll be from not scaled up, but with respect to defense, I think the defense manufacturing will also be exporting. The pharma ecosystem to be turning negative, but my cast closer to his chest, but it will open up newer markets for India. So pharmaceutical presents us after this correction a good opportunity to look at it. The generic opportunity is going to become larger. This corrections in some price points because of good entry points from here.
Okay. Let me just drill it down a little further. So, within pharma, you like CDMO players. Would you like to name a couple based on the kind of fourth quarter numbers that they've done in, and of course, based on valuations?
Yeah, so Shail, the debate that we keep having is that a lot of future has been built into some of the CDMO stocks at this. So we have to wait and watch till the entire free trade agreement, is laid out and signed with all the countries. Then we will be able to figure out the winners and losers. As of now, I think you can look at Dr. Reddy's, you can look at Aurobindo, and pick some of the smaller names in the pharma side. So that is where the opportunity is. So typically they have to be the existing players because the go-to-market strategy is really complex, getting the approvals, getting the capacities approved. So yes, it is going to be the existing players who are ambitious and who are out there with their filings and trying to win in the market space. So at a structural level, if you ask me, pharmaceuticals from here over the next 1.5 years should be an overweight for you. At this moment, that is the only color that we can offer.
Okay, okay, fair point. So, overweight in pharma, specifically CDMO players, that's one learning that we get. Now, you preempted my question on defense. Many of these stocks, Harendra, have gone up by 50-70% since May 11th after this 4-day war that we had with Pakistan, in which domestically made equipment came out on tops. Do you get a gut feel that we've crossed a pivot as far as domestic players are concerned?
Yeah, I think the point here is that the recognition has come that how underinvested we are. See, that is a very, very important point because the challenge that we face is whenever we market defense names, the key question is, does Indian manufacturer have the supply side to cater to the demand? Let me assure you, be it a Tejas, be it a Bharat Dynamics, be it any company, it is not the demand side. It is the supply side that is challenging the valuation. Of course, we could go out and give more orders, but the companies will be unable to fulfill it because there is no supply side. Now, again, align the context here. India faces engine shortage supplies. But if you analyze the UK FTA and the news flow that is now, already we have opened up windows with Rolls-Royce, which is a large player in engines in the worldwide market. Now, of course, this will take long term to play out, but this is opening up different channels from the existing channels that we are currently importing from because our Tejas is lacking because of the lack of supply of engines. So we have to see how India is trying to align the supply side also with our FTAs. So yes, defense is going to be a structural story, number one, but it's a supply side constraint. So the overvaluations will have always two sides to the market, people who are believers and people will question the valuation. But structurally, I think they will have a good compounding story. But within this as well, I think the recognition is that the type of warfare that the world is fighting, even after yesterday's reports with respect to how Ukraine could go into Russia with drones, right? What kind of technologies, what kind of weapon system is going to win in the long run is still to be established. Yes, there are now opportunities wider than few of the government players. There is going to be privatization, and there are going to be several more smaller winners in this space. So yes, defense will be a structural opportunity. I think it's worthwhile to stay invested.
Okay. And uh, would you prefer PSU defense themes, or would you have a soft corner for some private defense players as well?
See, as of now, Shell, the ecosystem is overweighted towards the PSUs because the ecosystem with the DRDO, with the PSUs, with the government is only well understood by the PSUs.
Okay.
So the private players will be a smaller part of the value chain as of now. But of course, this is going to change because the acceptance with respect to defense technology is improving. But if you ask me, the development towards shipbuilders and missiles and electronics would continue to remain high in the medium term. So if it's going to be Hindustan Aeronautics, it's going to be Bharat Dynamic, it's going to be Mazgaon Stock Builders, right, and BEL, which will probably outweigh the smaller players in the medium term.
Harendra, when you look at your crystal ball, do you see any global shipbuilders, any global, maybe US players trying to take a stake in a domestic Indian defense PSU?
I think that's unlikely because these companies are very strategic and the sensitivities around technologies is very, very high. You can see niche private players with technologies, contributing to the defense ecosystem. But a foreign player coming directly into a PSU at this stage is not that we are aware of.
Okay, fine. Now, two more important things have happened against the backdrop of the banking sector. One, a Japanese giant has been welcomed into Yes Bank, and there is a clear indication that sale by the government. How do you see these two steps as creating value in the banking space, especially for these low ticket stocks?
So I think, of course, foreign capital is welcome, which is a testimony that the Indian banking sector multiples have been on a compression path over the last 3 to 4 years. be it HDFC Bank, ICICI Bank, or any bank. I think they're struggling to cross 2.5 time price to book multiple. That's because banking per se has become very commoditized. So it's a price war. The products are very similar, and the customer is fungible and he's chasing prices. So if you ask me, the value migration has moved towards fintech, it has moved towards capital market players. You had some spectacular run with BSE, unlisted NSE, and even the wealth managers. So banking within the whole, it has to be looked from the whole financial space. So if the asset manager is looking at, he is not finding alpha in some of the larger names he's been holding on for several years. In fact, it is the life insurance, wealth managers, and maybe select NBFCs is where he's looking for opportunity.
Okay, when you put in your thinking cap and look at the 100% FDI into insurance, is this a sector which seems to be opening up for more foreign FII inflows, given that for the last 10 years we really haven't made any money in any decent sized insurance play?
Yeah, I think what I'm told is this was always there, and this budget has just notified, but it's not seen traction with many foreign players coming in buying the Indian insurance sector. And so I would not read too much into there because they've struggled to add value over the last 2 to 3 years as well. If you look at the share price performances, the industry is going through a churn of its own with regulations and heavy competition. Private players are unable to break into rural areas. So the urban market is saturated. And with respect to general insurance, also, the government has gone out and done such heavy penetration with respect to Ayushman Bharat, etc. There's very little market opportunity. So long-term growth in this sector is being questioned at this moment. So that is getting repriced into the market. So event-wise triggers with respect to a foreign player coming, adding value onto the overall value creation journey of the sector looks very, very remote at the moment.
Okay. In your estimate, where is institutional money likely to move in over the next 15 to 18 months? You mentioned wealth management as a space which is attracting a lot of fresh funds. How about maybe the NBFC space, given the softer interest rate regime that we have in place now? Does that attract your attention, or even fintech has overcome that?
No, I think this is a very valid point. I think we'll just take a step back because I think the FIR money, which is the point that I want to make here is people thought we'll chase large caps after the correction.
Huh.
But that doesn't happen because large caps are now going to deliver only 12% growth or nominal GDP growth, right? So the opportunity lies in the broader market, and the FIs are chasing growth over valuation. So if growth returns, it's going to be the broader market that will deliver returns, right? So I think that is something that we have to keep a point as India's economy expands, the opportunity pie will go towards the longer tail. Now, within that, of course, like we said, the banks are oversaturated. The tail within the financial space is very, very large. Generally, a lower rate cycle helps NBFCs because they can go out and lend faster to untargeted segments which the banks don't focus on. The other part is here microfinance. I think they've been bludgeoned now over because of the NPA cycle. They've come to attractive valuations, but you are also seeing rural recovering and a rate cut cycle that is favorable. So this is a counter-cyclical opportunity. If you have the hearts for it, I think you should start looking at microfinance names at this given point of time. My guess would be that over the next 3 years, they'll give better returns than even banks or NBFCs. Fintechs, we have few opportunities except for Paytm, PB Fintech, and possibly Geo Financial Services. I think they'll do well because over large terms, tech companies with the financial backing and financial opportunity will do well. So that is how we are playing the financial space.
Okay, so your favorites are Paytm, PB Fintech, and Geo Finance. Within the microfinance space, what would be one or two top picks for Elara Capital?
So I think there are microfinance banks and there are microfinance institutions which
Yes.
are NBFCs. At top of the mind, I don't have names, but I think the whole segment looks very, very interesting.
Okay, now this would be relatively relative valuations because every 5 years all of us burn our hands on microfinance, wish them away from our lives, and after 2 3 years the valuations become so juicy that we are forced to look at them. I can't forget SKS Microfinance ever, and then we had this very recent blowout of a company that wrote out I think 500 crores in a single quarter. I forget the name. So, with that background, we must look at microfinance stocks, shouldn't we?
No, I would counter that with the write-off that we had on large banks, not very distant in the past, right? So I think we have to take it as it goes, right? So and look at it from the fresh lens.
Every 10 years we rewrite the history of the markets and we forget the past only to remember it 5 years later.
Yeah, in the books.
Okay. Okay. One sector let's discuss is IT. Now, it's been a rank underperformer in a market that's done phenomenally well over the last 15 months or so. What's your view on artificial intelligence? What's your view on Infosys, TCS, Wipro, HCL Tech and Tech Mahindra, the top five? How do you think when you listen to their earnings calls, interact with their managements, how are they grappling with AI?
So, okay, first and foremost, I think on the worries on the US markets, I think this overrated. The economy is doing fine and settled. So, I think in terms of the profit mornings that people are building in, I think that's not going to play up. So, with there is going to be some tailwinds on growth for the tech names. I think we can start off from there. Number two is it's very difficult for these tech names to grow beyond 7 to 8%. If the narrative at all is there with respect to a turnaround in TechM. So your alphas will come down the tail with respect to some restructuring, some companies that are more ambitious and deliver value. Eventually, the growth rates will converge to the large names. So the trade that you want to do is to find such names which are exciting or trying to transform themselves. Now let's come to AI. AI is something that's spoken of. I think this will be a service that will be embedded with what you're currently offering. It's not something that's going to be a game changer. More so, it will be a threat to the current business models for large IT names, but it's not in the near term. So most fund managers would like to trade IT as tactical bets, buy it at a price and sell it higher. It's an overweight, underweight game rather than structural. If AI is going to help the business process outsourcing companies. If we think that what could be done by people, which is a cost and which had an inflationary component to that, and it gets replaced by AI in terms of document processing, in terms of document reading, reading out errors, or like insurance processing, they will be big beneficiaries. We don't have such names on hand, but at least we're sure that knowledge processing KPO BPOs will have huge margin deltas to their current business numbers. So that's way down the tail, but that's more tactical than probably a large portfolio holding.
Okay. Harendra, when you look at the entire corporate India, especially the top 200 companies post fourth quarter, are you rubbing your hands with glee in terms of stock picking? Because as you say, the tailwinds are very strong and a lot of money is expected in India. Or is this going to be a situation where too much of money will chase too few stocks?
Oh, not at all. I think it's a very pertinent point. So two, three things have happened, Shailesh. One is, a lot of companies have announced capital expenditure, right? So we've had companies that announced expenditure on batteries, people who announced expenditure for chemicals, people who announced expenditure for PLI, right? And the demand did not come. So the stocks have got repriced lower, but the numbers are pretty much trickling in now. All right. So wherever people had built into the future and the stocks have corrected, they've come to a very attractive level. And the I was looking at some of the numbers. They are showing some buoyancy. Look at the Nika's number. Look at some of the chemical numbers like Gujarat Fluoro. Look at some of the agri-chemical numbers. So I think there is some element of recovery with the government spending, be it consumption, be it low inflation. So we have analyzed the market. In fact, after the correction in September, not all have recovered. Most of them have come from earnings growth, right? Which is the good part about the market as of now. So the market is not frothy, it is driven by earnings. And as a semblance of earnings comes back, right, the market will start to read it. So I would say there is a large part of the market where opportunity lies, where people are not looking at it. It's going to be a tough market, but if you do your grunt work, you are going to manage to be better off than the broader market.
Okay, now let's talk about this grunt work. In the universe that Elara Capital tracks, what would be the top 5 stocks that you are recommending to your top 20 clients?
So, like I mentioned, since you're pushing me for the names, I would rather go
Okay,
on. I
let's
think,
not take names. Let's give a broad description. I'll find the names myself.
yeah. So we discussed fintechs. We've
Okay,
discussed. I think the other big space is on, hotels
okay.
space. I think we are in a structural bull market, and if you're playing the rate cycle, I think the real estate cycle has come off to a good price point. All the names will have tailwinds with lower rates and good income growth. So I think real estate is also a good entry point at this given point of time. And we've discussed pharma and tech as very tactical, but not very, very long term. You will need to go into these names with an exit price in mind.
So, of course, we have 3 stocks that you've suggested on the fintech side, then hotels, and of course, real estate. So, real estate, of course, is also a soft interest rate play in the market. Although what is coming in the news is flats worth 600 crore rupees. Harendra, I fail to understand. How retail investors will make money out of it. Nevertheless, this is also a phase that we are going through as far as the broader economy is concerned. Towards the agricultural side of the GDP, which is now about 16%, 17%, what looks good? Agrochemicals, you mentioned in the passing, may provide some opportunities on the lower side.
And also on the FTA side, Shell, I think the government is going to offer some concession to US American companies with respect to genetically modified seeds. I think if there's any US company which is into that space, I think uh, some relief will be offered with respect to in that area. So earlier there was not a consensus. The government is inclined, but there's a lot of internal resistance towards that change. But I think with respect to something on agriculture, which adds productivity, where there is political resistance, but given this FTA that we are pushed, the government will go ahead and do that. So then you have oil seeds manufacturing, and then you have nano chemicals, nano fertilizers. Then you have Coromandel, which is doing fantastic work with respect to drones and right building new lines of businesses. So yes, there is opportunity. That is an area that the government keeps focusing on, but it is slow moving compounders. But it's not that there are no opportunities. Yes, if you are patient, there are good names, some of which we have mentioned, should be part of your portfolio.
Okay. Anything that you are avoiding with the barge pole?
Like I said, I think banks per se, will give you, will not keep you excited at this given point of time, right? But there are other areas in that, and I think valuations on the capital goods are not yet comfortable for an entry point. So people, though the structurally they remain very good, they're part of the cycle, but I think you will get better entry points for alpha generation.
And with Mr. Trump's increasing emphasis on, trying to spoil the party and injecting volatility across the globe, how do you see equities as an asset class over the next 3 years that he has with us?
I think the point to take away, Shell, is that he wants a weaker dollar. That is his stated policy. A
Okay.
weak dollar is per se good for emerging market. And and all what he has done is basically he's ruffled up so many feathers, is that the capital is trying to find safer and better, more opportunistic havens. And India becoming the number fourth largest economy with falling inflation and a GDP print becomes very attractive. A very interesting point I want to put here is where the US market has peaked out. The world index is looking to break out, right? The
Uh,
world index will be driven by the EM markets. So if we play our cards fine and the macro story remains intact, I think we are in for a large beta rally in the medium term, right? So whatever Trump is doing, I think he's creating opportunities for people who are ready to take it. So of course he's doing it for America, but in the meantime he's shaking the confidence of several markets. And if we align that with our FTA and our export strategy, we'll be in good state. So these are the catalysts that are working for the markets. We need to work on our EPS numbers and do the right things, and I think the capital will come in sooner than later.
okay. And maybe a view on gold at current levels?
See, gold can be, 5 to 10% of your portfolio. I think it cannot be a large overweight. If you look at the historical number, there's short bursts in a 50-year cycle, right? And then you talk about gold, but per se its annualized return is only 7 to 8%. Equities has trumped gold over the long term. Currently what you're seeing is a dislocation of the dollar trade where the money is flowing towards gold, right, and it's pricing in the increased risk in the global markets. That narrative can change probably in the next 12 to 12 months, but equities, you can't generate ROEs above cost of capital in either asset class as much as equities. So frankly, if you ask me, commodities will have the short burst, but it is the long-term compounders that have added value. So yes, you can have 10-12%, but not beyond that in terms of commodities.
Fair point. And Harendra, my final question to you. I wish we could have gone on for another 2 hours, but time is of the essence, especially to you. We've had a record high on the Fin Nifty and on the Bank Nifty. Considering these are two spaces that you feel are modest in terms of future expectations. In 2025, do you see a record high on the broader market, maybe on the Nifty and the Sensex?
Yeah, absolutely. Like I said, 28,000 is not very far off, but that is not very exciting returns because we are just 8-9% away from the current levels. I think you will find alpha within the broader market. Right, for the market to go to 28,000, you just need a HDFC Bank and a Reliance, and select movement in the IT stocks to take you there. Does not take a lot for the Nifty to go up, and it'll keep sentiment high. But I think with respect to real alpha generators, you'll have to work harder. But that's in the offing, like we discussed flows and rates and everything. But that's where the opportunity lies.
Say 28,000, or did you mean 26,200 for RIL and HDFC to edge up?
RIL and HDFC will continue to edge up because there are a lot of triggers that should keep the Nifty in good state.
Okay. With that, Harendra, and on such a positive, optimistic and wonderful note, let's call it a day. Next time I'm in Mumbai, I'll look you up and we'll chat a little bit more on Pharma, CDMO and other stocks that Elara Capital researched out. Thank you so much for your time and have a nice day and a great year ahead, Harendra.
Same to you.
Okay. That, ladies and gentlemen, was Harendra Kumar, MD for Institutional Equities at Elara Capital. A wonderful conversation spanning many sectors, in particular the structural changes that are happening in the defense space, which provide long-term opportunities for good compounding, as also little known microfinance spaces, hotels being in a structural bull market, real estate stocks presenting a good entry point. There was a lot of interesting thoughts that Harendra has left us with, and let's hope we capitalize on all of them in the coming 6 months. Thank you for watching. I hope it was as exciting for you as it was for me.
India's top defense official, CDS Anil Chauhan, has torched Pakistan's web of lies. Speaking to a global agency, the CDS said that the forces suffered losses in the initial phase of Operation Sindoor, but quickly changed tactics to inflict maximum damage on Pakistan. He asserted that the